Bitcoin has seen an explosive rally breaking through the weekly downtrending diagonal resistance, resulting in a move to 28,000. Will Bitcoin blast through 28k and continue upwards, or are we going to see a rejection? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. Bitcoin has seen an explosive rally out of the weekly downward trending diagonal resistance, resulting in a reversal towards 28k. In today's video, we're going to be reviewing the high time frame charts, the technical and structural levels on both the weekly, monthly, and of course daily, as well as discussing the short-term price action. Is Bitcoin going to break through 28 and continue this macro uptrend, or will we see a rejection from this key point of liquidity? Let's go ahead and jump in. Now, before we do, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and of course, the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in our trading channel, you can join our VIP group. We post trading signals, as you can see over here, with exact entries, exact targets, exact stop losses, trade justification, and of course, exclusive charts to go along with them. If you're interested in joining this group over here, including access to our group chats, general chat, trading chart and education chat, daily video chat, help chat, news chat, and trade setup chat from our own members, you can go ahead and contact me via the pinned comment in the free channel to find out more information on how to join. Without further ado, let's go ahead and get stuck into it. So of course, Bitcoin has seen an explosive, and we mean explosive, right? If we take a look at this candle, guys, look at the speed and velocity of that move upwards. It was a near vertical move towards 28k. In fact, some exchanges on the leverage exchanges pushed a little bit higher. But all in all, a 1 minute candle resulting in over $80 million. $80 million in liquidations for shorts. As of right now, 24-hour volume is up 65%. Sitting at a total of 52 million. 24-hour liquidations are 108% up to, 108 million up 273%, and shorts are at 94 million. The largest liquidation coming in at 8.39 million. That means some poor chump lost $8.39 million on that 1 minute candle. What a way to lose that amount of money. Anyway, moving on from there, guys, we take a look at those liquidations in further detail. Again, we can see the vast majority did come from those short positions. Looking at the volatility index on the 30 and of course on the 60-day, the 60-day is still moving sideways. We should see a bit of a move upwards in upcoming days. And of course, the 30-day is still moving downwards again. We should see a little bit of a bump up in coming days due to the recent surge in volatility. Moving over to the DXY is actually ticking upwards. And once more, going back to the DXY, guys, the DXY will remain in an uptrend while it remains above this uptrending diagonal trend line. And provided it can stay above there, we do expect the DXY to continue upwards. So DXY continues upwards, we should see some bearish retracements in the markets. And Bitcoin is really deviating away right now. If we take a look at the stock market, which we'll do in a second, the Dow Jones is moving down. The Dow Jones is looking quite weak. S&P 500 was looking quite weak, right? It's opened up this candle red. It's found a bit of support, but it's nowhere near as strong as Bitcoin. Bitcoin is really blowing it out of the park in terms of overall risk asset strength right now. But provided that remains a fact, the DXY will continue upwards. And of course, if it does continue upwards, we do run the high time frame risk of a correction. Now, of course, the most important thing is going to be interest rates and inflation. If inflation continues to come out higher and higher, which it very well could, interest rates could then start rising, and that could have a profound impact on the markets. However, the probability of that is quite low. It is more likely to start printing more money, pushing the markets up as per our general market cycles. If we do want to see more health in the markets, particularly the stock market, it would be nice to see the DXY crash toward the downside. That would further go ahead and support the fact that Bitcoin is reversing and continuing upwards and could result in the next leg of the uptrend actually resuming. Anyway, good thing to look at. Definitely keep an eye on it in the coming weeks. Moving on, the S&P 500 is still looking relatively weak, right? We've found our base of support over here. If we do lose that level, we will continue downwards. Until then, support is support until it's not. This, of course, is going to be our uptrending diagonal support. So we do actually manage to hold above here, we should continue upwards to our next level of resistance. If we fail to hold this level, expect a correction down. But remember, support is support until it's not, and therefore we should treat that as support and expect a bounce. Dow Jones is not looking as healthy. As a matter of fact, we are in this overall downtrend now. We have lost the current support level, and we do expect this trend to continue downwards, provided we remain above, or should I say below, this uptrending diagonal trend line. Let's go ahead, guys, and jump into Bitcoin, and we're going to keep today's video short and sharp, because I want to get back to the markets. I want to get back to trading, because holy hell, guys, so much volatility. It's so nice to be able to jump in, take some scalps here and there. So we'll get into the video, get it smashed out, and jump back into the market. So, starting on the daily chart. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWow exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Bitcoin has finally seen that aggressive breakout above the weekly downtrending resistance. So yes, the weekly downtrend is officially over. We are out of the weekly downtrend. We are in a daily uptrend. We are in this uptrend as of right now. We are not quite yet looking fantastically bullish because we still are under some key levels. But we've made a massive dent in that move. We've made some significant progress. We're looking very strong, but we haven't flipped in the most important level. The most important level, guys, being the 28.4 to 28k level. The 28.4 to 28k level is the level we are currently retesting. As you can see, the daily candle actually just closed. It closed, let's take a look. The daily candle just closed at 27,991, so just shy of 28k. Again, the 28k level is probably the most important level in terms of high time frame triggers for a high time frame continuation upwards toward 32k. If we want to see us move upwards here, we need to get above this major area of resistance. Now, is the chart looking good? Yes, the charts are looking good. We are out of the weekly downtrend. We have positive momentum. We have positive volume. However, this particular move occurred very quickly, and we have already cleared this area into resistance. So if you've been following us and you jumped in some longs, you caught some longs like we did. We've got a lot of longs over here printing profits. But I do have to be the guy to say it again. Resistance is resistance until it is not. And we are now currently retesting resistance. Although this move was a fantastic move, it happened very quickly. So the distance between here and here, we are still at resistance now. So when we are at resistance, when we are at a major area of liquidity, we do have to be a little bit more cautious, right? You're not going to be jumping into aggressive longs on Bitcoin right over here while we're at 28k. You should have done that on the breakout. You should have done that on the move upwards. You should have done that prior if you were doing so. But let's take a look at why 28 to 28.4k is so important. That's probably the reason we're doing this video today, is because 28 to 28.4 marks the distance between the upper band of the Gaussian channel as well as the upper band of the bull market support band. It kind of makes up this little area over here on the chart, this little between these two green lines. So this area over here is going to be a trigger point. If we actually look at the chart for what it is on the weekly chart and get rid of all of the indicators and draw our lines in, so 28K over here, okay, and 28.4K right over here. If we take a look at the price action, we can see around these levels we've had significant volatile reactions. When we broke above 28.4K over here and over here, we saw aggressive moves toward the upside, okay? This is straight away indicating 28.4 is a major trigger point on the high time frame chart, resulting in a shift from a weekly to a macro trend, okay? It signifies a shift in high time frame strength, relative high time frame strength. If we take a look on the flip side, when we lost this level, we saw a very volatile move downwards. So we do know it is going to be a key point of liquidity we need to break above to send the price back upwards. Right now, this area is being tested. Now, if we go ahead and overlay our technical levels on this chart, we can see the 50 EMA is just below it, but the most important ones is the Gaussian channel upper band and the bull market support band upper band. These sit between the 28 to 28.4K level. While we are underneath the Gaussian channel upper band, technically we do not have high time frame strength. This is a technical means of assessment, okay? This is not a personal opinion. I think we're looking fantastic if I said my personal opinion, but according to this chart, we don't have the high time frame strength yet. Are we building the strength? Absolutely. Are we gaining bullish momentum? Absolutely we are. But do we have that definitive, confirmed and validated bullish strength we need to say we are going to go to 30K right now? We do not have that. And I'll be lying through my teeth if I said we did. 28.4 to 28K is a key level of high time frame resistance that Bitcoin absolutely needs to break above if we want to see this gap filled. If we want to see 32K, if we want to see 30K, we need to get above this key level of resistance. Until then, we are in our chop zone. We are still in this high time frame range between this 25.2, which is our bearish trigger, okay, bearish trigger, and as 28.4, which is of course our bullish trigger. We are still moving between this range. Although we are looking really fantastic, as we'd expect, we broke out of our weekly downtrend, we are still bound by this resistance. So there is no point sitting here saying we're going to go to the moon, we're going to 30K, we're going to 50K before we break over 28. Let's zoom out even further, guys, and we'll get back to the smaller time frame in a second. We are looking great, okay? We are looking great. Objectively speaking, we are looking good. We're broken back above the 50 EMA on the daily. We're broken above a 50 EMA on the 3-day. We have a surge in volatility and momentum, right? We're seeing momentum spin back upwards. We're seeing the Marcus OB print a green dot, which signifies increasing bullish momentum. It also signifies decreasing bearish momentum. So we have building strength. We have developing strength that could result in a continuation upwards. If we go ahead and apply this, we have technically got a higher low, right? We have a higher low over here, and all of that occurred within that major area of support between 25.2 to 24.4. If you remember what we were saying this whole time, we did not expect a continuation lower until 24.4 is broken. 25.2 was a major high time frame support. In fact, we expected a bounce from this level, and we have now seen that. But we still do admit at 28.4 is really when we're looking for that crossover point, that real definitive shifting point where you can say of high certainty that we right now have significant strength. So let's take a look a little bit further, guys, and discuss, what would really happen if we continue upwards, because we do have a real possibility to do so. However, we are at resistance. We do have the possibility to continue upwards because the high time frame charts are showing a degree of strength. The short-term charts are building strength. We have overall strength. The sentiment's good. October's generally a bullish month. We could see some good things happen. So we do have the possibility. So if we continue upwards, guys, the first step is going to be 28.4K. If we break over 28.4K, that is when we come back to retest the range low of this consolidation range right over here. So then we're looking for a move to around 29.8. 29.8, if you remember our channel all the way back over here, was a major trigger point for a continuation downwards, which we did see. So if we move over 28.4, expect 29.8, and then we're looking for moves back into 31.3 to 32,000 if we see that continuation upwards, okay? On the high time frame chart, if we really go ahead and zoom out over here, guys, if we see a macro continuation even higher, right? Let's hypothetically say we go all the way upwards and we break over let's go ahead and 1 second, guys, bring up the VRPV. If we go ahead and break over 32K, where can we expect Bitcoin to realistically go next? Well, let's take a look, guys. If we go ahead and bring up our volume ranges, so we'll change our row size to 200 and zoom out a little bit over here, we can see if we zoom out all the way, we have this trigger point above 32K. So we'll go ahead and draw that trigger point in right over here, 32K, that monthly trigger point. If we take a look at the VRPV on the right-hand side, you can see it very faintly over here. You might have to zoom in on your monitors. The VRPV kind of drops off a little bit and starts building up to around 40 to 38. So the next target will be around 40 to 38K if we continue past 32K, and then we start dropping downwards to around 48K again on the VRPV. 48K is a very key level of resistance on the high time frame charts, particularly on the monthly charts. If we go to a monthly chart over here and take a look at 48K, 48K is in fact this dotted trend line on the chart, which marks the dead cat bounce high of the current or prior cycle. Dead cat bounce high. You can see last time we had the dead cat bounce high, and even in the bull market prior to that, we had that dead cat bounce high. What happens, what happens when we break above that dead cat bounce high? Right over here, monthly candle close, we continue into a bull run. Right over here, monthly candle close, we continue into a bull run. And therefore, for the bull run to officially start, we are looking for that monthly candle close above 48K to result in that bull run continuation. Now again, according to the 4-year cycle, this is not expected until on or after April 2024, according to the date range trend of the 4-year cycle. So there's no rush. We're not under the pump. We've got plenty of time before the market should theoretically reach that level. If it happens sooner, fantastic, but it is not expected as per the 4-year cycle until on or after April 2024. Let's go ahead and take a look at the short-term price action. Now, I would have to give everyone a warning. Due to the overall volatility of this price action, is very, very likely by the time you watch this video, the price action is in a completely different spot as it is right now because of how crazy this price action has been. Anyway, we've seen a massive, insane move to 28K. Okay, I'm telling you right now, this move was one of the wildest moves I've witnessed for a very long time on Bitcoin. If you think this is retail, you are living in the clouds, mate. You are absolutely living in the clouds. There is something obviously pushed the price action up here, maybe institutional, maybe massive spot bidding somewhere, but something pushed the price action up, and now we are pushing sideways. This right over here is what I call a leverage trap. It is a leverage trap, meaning the price will move just high enough for you to think it's going to continue upwards, and then it is going to correct. But it's not going to correct a lot. It'll correct a little bit. It'll correct a little bit. It'll correct a little bit. Then the price is going to move just to where you think it's going to fully correct, and then it's going to move back up. And what is it doing right over here? We're seeing this consolidation phase. We're seeing these waves up, down, up, down, up, down, up, down, over and over in this tightening range. It is compression. It is, what is it doing? It is forcing people to enter the market, take high leverage positions before it then wipes you out. If you take a look at the order books, and whoa, what the hell are going on with the order books, guys? This is crazy. I might refresh the page. Either that's a glitch or the order books are absolutely wigging out. Okay, it looks like it was a bit of a glitch. If we go to the 100 on the order books over here, we can see there are absolutely massive walls sitting at 28.1, okay, to 28K and 27.9. What does this mean? It means whatever's pushing these market orders, whatever's spoofing the market, wherever these orders are lying, we are building up a degree of compression between these two levels, okay? It is forcing the price action to move sideways. If we have forced sideways price action, we have an extended period of time where people can enter leverage positions, and then it is going to drop those walls. I tell you right now, guys, if we break over this 28.50 level, this 28.100 level around about over here, we break below this low over here or this low over here, we're going to see a violent move in either correction. I truly believe this violent move will be a very, very brutal move, and it will liquidate a lot of positions. We've already seen over $100 million in liquidations, and the day has only just begun. Okay, the day has only just begun. We've seen $100 million in liquidations. We are seeing a lot of positions open within this range. We're seeing that wall be created on each side, and when that wall goes away, whenever the market makers decide to lift that wall, open the floodgates, we're going to see liquidation wicks on either side, or just one big correction up or one big correction down. So be very careful if you're trading this. I mean, honestly, this is probably the most obvious leverage trap I've seen for a long time. This is pure market manipulation right over here is going on. Do not trade this unless you're trading with a very small amount of money or very tight stop losses. Where do I think the price will go? Well, look, resistance is resistance until it's not. If we do see a correction, I think we would see a correction from here. We would see quite a brutal correction. We could theoretically come down to 27.5. Now, if we do continue upwards, I wouldn't be too pressed to see a move to 28.4, because 28.4, once again, guys, or maybe tap these high points over here. So come back up and fill this level of liquidity around 28.33 to 28.4. That would probably be the best case scenario, I think, for the bulls over here, a continuation upwards. Now, of course, if we do lose these low points, we could expect a correction down to around 27.5. Again, this move over here would likely be more catastrophic than this move over here in terms of liquidations, because we are seeing a lot of long positions open up within this range. So either way, guys, be very cautious, be very careful, understand resistance is a resistance until it's not. If you are in long positions like we are, again, we are taking profits, taking another profit here. We're taking profits at these targets, taking profits at these targets. Do not sit in your positions right now too aggressively. Take your profits while the market gives you an opportunity, because in 10 minutes, 5 hours, 24 hours, you may regret not doing so. And guess what? You can always add to your positions and always take new positions, but you can never go back in time and change your actions and decisions to take profit, okay? Thanks for watching, guys. I hope you have a fantastic day. I'll catch you guys in the next one tomorrow. Cheers.